Federal Reserve now handing down a hotly anticipated quarter-point rate cut on Wednesday. The Fed approving a modest quarter-point rate cut, which will set the central bank's benchmark rate at between 4 and 4.25%. So Fed Chair Jerome Powell characterizing the move as a risk management cut and signaling more down the road with hopes of lowering the benchmark interest rate down to around 3%. Now, this comes as mortgage rates have hit three-year lows. Home buyers may see slow improvements after the Fed rate cut, but experts warn waiting could cost more with increased competition. Here now, Jenna Stauffer, global real estate advisor with Sotheby's International Realty, to break down what all of this means for both buyers and sellers. Good morning to you. Thank you for being here. You know, I wanted to hit you with some numbers right out of the gate here. Realtor.com reporting that mortgage rates have already fallen, and this is anticipation of the rate cut we saw yesterday, with the average 30-year fixed rate reaching now an 11-month low. It's standing at 6.35 last week. And it adds that anyone holding out on buying a home may be disappointed because the market is anticipating these 3 cuts before the end of the year, 3 more by the end of next year. What are your thoughts on that analysis? Is this the time to jump in and buy if you've been waiting on the sidelines for something better?
Well, this is a welcome affordability boost, of course, to the housing market. I don't recommend trying to time the housing market. Look, perfect timing can be important in many aspects of life, but not when it comes to housing. You have to do what is right for you. We have seen a shifting housing market this year, and shifting housing markets, it can mean opportune times. So, of course, you want to take advantage of things while you can, but really what's happening with this rate cut and with potential rate cuts to come, this starts this lower rate spin cycle environment, and that's very important for the housing market. We don't know if mortgage rates are going to continue to tick lower. The reason why we have seen them go down, as you mentioned, is that the market really priced this in. The last time we did have a cut, we actually saw mortgage rates go up. I do expect that there will be easing of mortgage rates. It might just not be in a straight line, but this is something that the housing market really needs. We need lower rates if we want to see this housing market moving. And of course, it's not just lower rates that we need. Rates are just part of this lethal combination equation that I bring up a lot. It's not just the rates that have held people back, it's the combination of the rates, the high home prices, rising insurance, rising taxes, rising maintenance costs, rising HOA fees. This is why this housing market has really remained frozen for the past 3 years. But look, real estate, it's cyclical, and hopefully we're going to be coming to a new cycle as we head into 2026.
Yeah, well, that leads me to my next question, Jenna. You know, do you see any relief on some of those other fronts in the near future or anytime soon?
What we're seeing this year is that we've seen this uptick in inventory. So what that means is that when you have this uptick in inventory, that does start to put downward pressure on home prices. And overall, you're really seeing home prices remain flat. You're seeing modest price drops in half the country. Again, I have to emphasize that they are modest price drops. But what's really happening is you're finally starting to see wage growth outpace this home price growth. And that's really big. That's something that's necessary on the affordability front. Of course, we've seen mortgage rates dip lower, so that can be big. And if we can see the combination of the two continue in 2026, that can really get movement. With higher home prices comes the rising taxes. We haven't seen much relief, of course, with that or with insurance. But you have to look at the positive, and hopefully we can see rates tick lower. Hopefully this really is the start of a lower rate spin cycle, and hopefully we can see wages really outpace home price growth.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.